And now it's time to begin with our first panel. The topic is the convergence of payments and FX, India's next fintech opportunity. For the same, I would request the moderator first to join on the stage, Ms. Shweta Das Gupta, Head of Product, BBPS, NPCI Bharat Bill Pay Limited. Let's have a huge round of applause for Ms. Shweta Das Gupta. So panel discussion 1, and requesting Mr. Amit Talwar, Chief Executive Officer at Niyo Forex, Mr. Hare Krishna Jena, Managing Director at Clearing Corporation of India, Mr. Neeraj Gambhir, Group Executive, Treasury, Markets and Wholesale Banking Products at Axis Bank, Mr. Santosh Dujari, Managing Director at CITI. Let's have a huge round of applause, everyone, for all the speakers. So everyone with us on stage, we have Mr. Amit Talwar, Mr. Hare Krishna Jena, Mr. Neeraj Gambhir, and Ms. Santosh Dujari. Let's have a huge round of applause for all the speakers.
Shall we begin? We are already late, and sorry about that. Thank you for bearing with us so far at this early hour in the morning. Good morning, everyone. Welcome to the Convergence of Payments and FX, India's next fintech opportunity. I'm Shweta. I head product at BBPS for BBPS at NBBL, and I'm delighted to moderate the session today. We have a stellar panel with us. While my colleague already announced the names and titles, I would just like to reiterate Mr. Amit Talwar right next to me. He heads up Fintech and Forex, so Niyo Forex. It's a good mix of variety of the profiles that we have on the panel. Mr. Jena, who's the MD, Clearing Corporation of India, and a very senior professional who will share his insights. Mr. Neeraj Gambhir, Group Executive, Treasury, Markets and Wholesale Banking for Axis Bank. Again, a very senior person who will share his insights with us. Ms. Santosh Dujari from Citibank, Head India Subcontinent and Subcontinent for Services. She's also bringing a global perspective to the whole panel with us. Thanks, Santosh, for joining. And we'll start with some interesting insights. So anybody would like to say anything, or otherwise we'll begin? Yeah, we begin. Yeah, sure. So I just thought instead of keeping it straight into conversation, we start with a little bit of prediction cards or a crystal ball kind of statements where we see what each of the panelists thinks about some futuristic statements. So beginning it with Amit, cross-border settlements. Can we move to the first? Yeah. So cross-border settlements will be as seamless as UPI transactions within next 5 to 7 years. Amit, I would like you to say something about what this timeline is, whether it is realistic, what do you think about it?
Yeah, thanks so much, Shweta, and a very good morning to everybody. A warm welcome. I think the prediction that you have on the wall today, perhaps I would be surprised if it takes us 5 to 7 years, to be honest. If you ask me, I think this is something that could happen much earlier than a 5 to 7 year horizon. When you really look at, what UPI has done to the country and the way we do payments today and what it means to us today is you have payments that happen in a span of a few seconds at a fraction of a cost, if at all there is any for the user. There is finality of payment, there is transparency, there is visibility to the payment of the way it transfers, the way it sort of moves from one account to other account and sort of comes to a conclusion. If I look at the cross-border space today, the basic building blocks to make it happen are already there to a large extent. You look at the send side, the remitting country, the beneficiary country for a cross-border payment, and you have an intermediary sitting in between. Payments are becoming 24/7, 365, right? About 100 countries across the globe support that kind of payment today. Then you have real-time payments. About 80 countries support instant payments today within the ecosystem, as in send side, receive side put together. The cost of transaction on domestic rails is next to negligible. Not just India, I mean, globally also we've seen the cost sort of come down. And we've seen the local clearing systems offering features like account validations, positive confirmation, etc., etc. So the basics in terms of ability to make an instant payment or payment in near real time across borders is there on the send side, is there on the receive side for a lot of corridors. What remains to be addressed perhaps is the intermediary leg that takes care of some bit of processing, core bank related processes, FX, pre-funding, etc., etc. Which to my mind, again, if I look at the sort of recent developments that are happening in the ecosystem, with some of the large organizations, making good use of blockchain technology. Now we hear stable coins, digital currencies, use of AI, machine learning. So all of these put together can assist us and cut down the turnaround times required for processing a transaction, for the FX journey, the core bank, traditional arrangements, pre-funding, the risk associated with it, if at all any. If you can manage the leg on the send side instantly and the beneficiary side instantly, for which the building blocks are there, and this internal leg can be managed using the tools that you're talking about, then I see no reason, of course, with a little bit of regulatory blessing on both sides to sort of make it happen, to ensure we are as seamless as perhaps a UPI payment is. In fact, for that matter, if you look at UPI today, it's available in 8 countries globally, right? The Indian rupee is becoming more global. So you never know which way it goes. So my sense, it will happen much faster than that.
Yeah, no, I agree. Thanks, Amit, for sharing the insights. And this segment, we'll try to keep it short. And sorry, I'm saying it later, but so that we kind of cover more interesting parts which are coming our way. But basically, yeah, this should happen in shorter period, is what you're saying. And we move on to the next slide, to the next prediction statement. The next question I would like to ask Jena sir. India will become a global benchmark for clearing and settlement infrastructure in the next decade. Jena sir, from CCIL's lens, how close are we to this vision?
Thank you, Sweta. I think I will just have 1 or 2 sentences prior to replying to your question. I had a good cup of coffee, and that was seamless, because probably the coffee didn't have any emotional forbearing on my drinking the coffee. So that's why when we speak of how seamless would be the cross-border settlements, it's inversely proportional to the emotional quotient in the form of that pan-nationalistic emotions. If those things are reduced, then certainly many of the things. Of course, so far as we are concerned, it's not that we are devoid of natural intelligence, we go for artificial. Artificial only aids the natural intelligence. But it's more than that, the emotion which carries a lot of things when it comes to the execution of all these things. So probably that is the thing. When it comes to the preparedness for us, that being a benchmark, I think already we are a benchmark if you take the current, the settlements systems are concerned. We take the wholesale segment, whether it is government securities. I think many of the countries, they are trying to have T+1 settlement under CCP clearing when we started a long time back. When it comes to the Forex part, I think other than the derivatives, I hardly have come to know that the Forex cash segment is being centrally cleared. So that part we are already ahead of them. And when it comes to derivatives, we are almost at par. I will not say that we have reached the complexity of the derivative ladder, what the Western or the developed economies they offer. But whatever we offer, certainly we mostly try to clear them out on centrally cleared basis. So that way we are there. And when it comes to retail, certainly we are far ahead of others. Wholesale, probably we are not so much aware of it because it doesn't come to us with the breakfast. But certainly, whatever is there in the breakfast, behind that the wholesale market stays. So we are. And when it comes to the convergence of the international or the global standards, our regulatory regime is such that we comply with the principles of financial market infrastructure, and we do it in both letter and spirit. We are assessed under that, and our preparedness, and of course aided by the technology and other physical infrastructure, certainly it would be one of the benchmark which other global economies or financial markets can take lessons from. Thank you.
Thank you, sir. I think this what you're saying is it's already a global benchmark, and yeah, thanks for the insights. Next question, maybe I would like to ask Neeraj sir. Traditional bank fintech boundaries will disappear, and customers won't even know who's powering their transaction. This I'm talking in the context of cross-border and domestic. It's already happening, we know. So I think in the context of cross-border, if you could share your insights on that, Neeraj sir.
Morning, Shweta, and morning, everyone. My answer is yes and no. Let me address the no part first. Banks are, by definition, very heavily regulated entities. Banks deal, and the key reason why banks are heavily regulated is because they deal with public money, number one. They're the only entities authorized in any jurisdiction to accept customer deposits. And number three, they power the payment system of a country. I think all central banks, pretty much globally, it's the norm that the access to the central bank payment system is quite restricted and regulated to the banks. So if you're a fintech and you want to get into the domain of what a bank does, barring a few things, you got to be prepared to be regulated like a bank. Right? Because no central bank will allow you to do banking kind of services unless and until you are regulated like a bank. And that's where I think the no part comes in. That if you want to stay just a pure fintech, that boundary will not get vitiated, that boundary will not get diluted. Where the yes part comes in is that obviously fintechs have a huge advantage in terms of being able to innovate, flexibility, time to the market, speed at which they can deliver, and the ability to experiment with new technologies. Banks are inherently slow. Part of the reason is regulation, but part of the reason is also because the size of the business, the scale of the business. So to the extent fintechs innovate and banks partner with the fintechs in this innovation, yes, you could have some blurring of the boundaries. To the extent that banks provide the underlying service to the fintechs to be able to provide that end customer service, you will have a blurring of the boundaries. Classical example, we all talk about UPI. Ultimately, UPI needs to be settled. UPI payments need to be settled through the banking system. So every UPI transaction that you do, even you have a fintech who's providing that UPI service, at the end of it, there is a banking partner who's settling the transaction. And today, that entire sort of back and forth handshake happens in a very, very seamless way. So the customer doesn't know that ultimately the transaction is settling through a bank. So that's where the blurring of boundaries will happen. That's one example. There could be many more. So answer, yes and no.
Thank you. Thanks, Neeraj sir, for your insights. I think, yes, the fintechs will lead the customer side and banks will continue to protect the money of the customers. Yeah, absolutely. Thank you so much. Next question, Santosh. India's financial sector will move from digital first to AI first within the next 5 years. Please share how this shift might happen and what hurdles might come.
I agree. However, there's always a however, right? An AI-first an AI-first financial sector is not mutually exclusive from a digital-first financial sector. They are actually deeply intertwined, so it will be more likely an AI-led digital-first financial sector. If you look at the BFSI segment in India, it is a popular adopter of AI actually, because 71% of the firms actually use AI. Globally, there are reports which say that there will be a 46% improvement in banking operations by 2030. And globally, it is expected that all of this will unlock $300 billion because of efficiency in production. Now, let's look at it, how do we look at AI today? AI in finance is present today. Clients, experience it when they interact with chatbots. Employees experience it when we have intuitive, intelligent analytics. AI-led payment systems can actually enable creditworthiness assessments by using alternative data, and this will actually expand credit growth to the underserved. Now, all of this is present, but it's barely scratching the surface of the potential of a technology which actually betters itself every day as it consumes more data, as it interacts with certain nuances and patterns. It actually redefines itself each and every time. We have a lot to do. Everything is not in place. There is technology that further needs to be built out, infrastructure that needs to be built out, policy, and even talent upgrade. Even that is, some distance away. The government initiatives such as the AI mission, wherein there's investment of $1.15 billion and there's enabling policies which have been put in place, all of that is going to accelerate, AI first in the financial sector. It is also estimated that by 2033, the entire AI in BFSI is going to grow tenfold. So it will move from 830 million to over 8 billion. This is a 29% CAGR growth, which is pretty massive. So continued adoption of AI can actually help with the long-term economic goals of the country, such as a sustained, growth, credit growth, which is above the nominal GDP growth. And, with a lot of focus and fostering, it can, bring about financial inclusion as well as a very efficient financial sector. So, that's how I would like to round it up.
Very pointed answer, Santosh, and I think very clearly this should happen within next 5 years for sure. So thanks for your insights. I think these were the 4 predictions we thought we'll begin the session with. What's happening actually on the ground? Let's hear those real questions from the future statements. We come to the scenarios today and begin our session with some deep dives from our subject matter experts. And here we'll go about asking one detailed question from all our panelists and hear their thoughts. Maybe we'll go reverse, or we start with Santosh. So I would like to ask Santosh, from CITI's vantage point, how does India compare to global markets in terms of innovation and adoption? What can India learn from other geographies, and where are we already headed?
India's had a couple of remarkable decades of evolution of the financial sector. It is in fact leapfrogged, and it has gone ahead of a lot of the mature markets. It is regarded as a global leader. The UPI story is known to all. The success of UPI actually redefined financial inclusion as a concept in India. The success also is the impetus for NIPL to actually expand its scope and go into newer countries. If we look at all of this, actually, we can actually one second. I just catch my thoughts. Yeah, sure.
I agree. Globally, UPI is becoming. Everybody's aware of UPI, and yeah, from global perspective.
Yeah. It's. I think what I was trying to say is that we could almost think of this as India's most significant export of the past decade, and because NIPL has expanded to other countries, it is looked at. It is one of the most significant export of the last decade. The other piece which I wanted to talk about is that UPI is not, while it's the poster child, it's not an independent success story. We've seen the same approach taken by the government when they look at credit, when they look at commerce, when they look at infrastructure, when they look at policy. Now, all of these are reasons why, India is a very attractive destination for a bank like CITI. If you look at Citibank, when it looks at India, it's. I think I'm losing my thought. I'm sorry.
Don't worry, we'll come back to you,
if
that's okay. Yeah. Maybe next slide, if we can go to. This is a question I want to ask Jena sir. How do we ensure financial stability while experimenting with new instruments or cross-border settlement systems? What do we ensure? How do we ensure the financial stability from the settlement system, sir? If you could throw some light. Yeah.
Thank you, Shweta. I think so far as the financial systems are concerned, we run on certain things. It's a financial highway. So our vehicles will run very fast if the road condition is good. So the infrastructure has to be excellent. So the infrastructure, what we mean to say, that we should have good financial system, good technological platform. I think already my colleagues, they have already discussed that technologically how advanced and how innovative we are. And certainly implementing the innovations needs a mindset. So we have a very strong positive mindset. Now we will have to see that what are the other things we need. We need to have an alliance with the global standards. How do we achieve that? We will have to adopt the benchmarks either which are officially pronounced, or we will have to create a benchmark which could be adopted by most of the global financial systems. So here, if I take for a limited purpose that principles of financial market infrastructure of CPMI and ISCO, that gives certainly a major and broad framework to the payment systems, the central counterparties, the depositories, and of course the security clearing systems. So since all those things are already pronounced, and the central banks in most of the geographies, they have adopted that. So now if they are assessed under that, then certainly it would be a good progress. You see why all these systems are critical to us. You see, whenever we say that we have a democracy in our political system, so democracy has its advantages and disadvantages. When we get liberty, so naturally then we will have a lot of responsibility. To ensure that the responsibilities are being discharged, so we must have a regulatory system. It will not only be regulation alone, it would be a supervision that you are supervised that all the regulated principles or the regulations are being complied with. So do we have a better regulatory system? If we have a better regulatory system, better supervisory system, good technology, and of course we have a good financial market infrastructure, so the only thing what we need is a proper mindset which already we have. Since we have all those things in mind, so cross-border settlements or even domestic settlement will not be difficult. But as I told you, domestic settlement doesn't need a lot of, I think, emotional intervention either inside or outside. It's the same regulatory regime, same legal system. The challenge comes for the international, that is cross-border settlement systems. For that, as I told earlier, the propensity to be guided in their approach or behavior by the emotional quotient will determine how far our cross-border settlement system will be successful. So for that reason, I think we need a lot of preparedness, and the maybe central banks across the globe or the political systems across the globe will have to come out with a solution for that. Thank you.
Thanks, Jena, sir. I agree. This analogy with the highway systems and the physical friction, I think the friction is what we need to solve for, whether it is regulatory friction or technology friction, to make it happen. So thanks for your
insights. As Neeraj said, that the banks are highly regulated across the world, across the globe. And the CCPs, which I represent, they are regulated only. So much regulated that even the bank's regulation will look very diluted when it comes to the CCP regulations, because we are the people who would be providing all the aids and tools to the central banks to have a control over the systemic risk.
Yeah, thanks. Santosh, shall we come to you?
I just lost my thought. So I spoke a little bit about UPI initially and how it is the poster child but not the only success factor. And the fact that the government is very focused and has a similar approach to credit, to commerce, to infrastructure and to data. Now, all of these are reasons why India is a massive opportunity for a bank like Citi. Now, when Citi looks at India, Citi is seeing a country with cutting-edge technology, and it is a two-way approach, where India is concerned. Citi sees synergies both ways. It leverages innovation from India, and it also brings the best of its solutions into India. For example, in 2024 and 25, we launched Payment Express, which is our next-gen payments platform in India. We also launched Spring by Citi, which is an acceptance platform in partnership with a fintech in India. Now, all of these are massive opportunities. And while we look at these two ways, it is also important to note that there is potential to import a lot from the rest of the world, the best from the rest of the world. And I'll talk about a few examples, like from the US. US has made strategic advances in a couple of areas that it wants to focus on. So there's wealth tech, there's insure tech, there's also reg tech. However, the area in which the US is really advancing is digital assets and blockchain finance. This has been possible because the government is also looking at it in a decentralized manner. And the government is promoting it through policy frameworks such as the Genius Act and the Clarity Act. Now, the other developed countries like UK, US, and Hong Kong are also making progress in this area. While the narrative in the US is very, very focused on stable coins, it is actually tokenization and smart contracts that can actually fuel a quantum leap in real-time finance globally. If you look at India, India can take actually a phased approach and see how it can link to the global networks, and that will be a big step for India. If you look at Europe, they take a more policy-based approach to both, opportunities as well as risks, be it AI, be it blockchain, be it even sustainability. And we've seen that in the Nordics, we've seen a lot of enhancements or a lot of innovation, which is linked to a blockchain in the wealth tech space. If you look at UK, it's a hub. And we are seeing a lot of coexistence in this hub, right from prepaid cards, to a digital pound. Central and Southern America is also seeing a lot of fintech revolution in Argentina, in Brazil, also in Mexico. And they are a home to more than 1,000 fintechs across the world. ASEAN, again, is taking its own strides. If you see, they are trying to leverage a lot of partnerships and collaboration. And through these partnerships and collaborations, they are trying to link not only banks and fintechs, but also the regulator and other countries. And, QRIS in Indonesia is a very good example. If you look at all of these areas and put them in context of India, you will see that they will provide enough and more opportunities for us to thrust forward and for us to actually, have a path for development for the future.
Thanks, Santosh. Thanks for those insights. Shall we move to the next slide? Just to cover up for time, I'm just rushing because Sanjana is telling me, let's just move faster. So, okay, I think, Neeraj sir, for you, how do banks partner with fintechs while safeguarding regulatory and balance sheet priorities both? So how do banks?
So this is, I'll just carry forward from what I spoke earlier, right? The differences and the boundaries between banks and the fintechs. I think fundamentally it's about how you are regulated and what the regulatory obligations are. Banks will continue to have a very heavy burden of regulation, largely because they're the custodians of public money, right? And a lot of that regulation actually falls into the sphere of KYC. So the KYC obligations that the banks have to deal with is actually quite onerous. Fintechs, on the other hand, can actually at times innovate, bring out new products, deal with products and services while being a little light on KYC requirements. So I think that's one area of difference that I clearly see where partnership between fintechs and banks has to be negotiated well. There are fundamentally two models for the banks as far as technology is concerned. One is either you build, second is you buy, right? And I see partnerships with fintechs in both of these models.
Check. 1, 2, check. Check, 1, 2.
Somebody wants something very important here.
Some ghost voice coming.
Yes, I'll wait. I'll wait for them to finish.
It's okay.
Are we done? Okay, great. Thank you. As I was mentioning, that there is a partnership possibility in both of these models of build and buy. We have in Axis Bank done partnerships with fintechs where from a build perspective, these fintechs have developed platforms, and these platforms are customer-centric, customer-facing platforms. And then we have actually partnered with them to sort of customize these platforms, white label them for us, and then we have gone and offered these platforms as Axis branded platforms for our customers. And this is one example where we have done a deep integration and partnership with a fintech. The second area of partnerships is where the fintechs power some of the stuff that we do. Even though it is a technology which is not clearly visible to the customer as a fintech technology or fintech platform, but there is a deep engagement and deep powering with the fintechs. So I see both of these areas continue to work well. And in both of these areas, there is enormous scope and opportunity for banks and fintechs to sort of collaborate and come out with products and services. To me, AI continues to provide that opportunity in a big way, because a lot of the front-end innovation that is there in the AI space will be, in some senses, done by fintechs, and banks will look at opportunities and spaces where the fintechs have done interesting work in this area and sort of imbibe that technology. Finally, I would like to say that, and again, continuing with the previous thought, that there are certain areas where the boundaries are hard to break, but the collaboration and the fact that in both of these spaces you have opportunity to work together is something that that I think will continue to evolve over a period of time.
Thanks, Neeraj. And yeah, banks being the custodian of money have to definitely stick to the stronger KYC norms. And AI, yes, I mean, while BFSI has adopted, I also feel that banks are going slow on that because they have their own regulatory policies that they need to cross before adopting AI in a big way. And we at NPCI also kind of have some of those challenges when we are moving ahead in that direction. Moving on to Amit, I think, Amit, your inputs on how tech is reshaping customer experience in Forex and cross-border payments. That'll be wonderful to know what you are seeing as trends. Where are the opportunities?
Thanks. I think technology has already reshaped these cross-border payments to a large extent. What we see today is basically a good convergence of, let's say, travel that involves Forex with finance, technology sort of coming together. We've seen payment service providers, etc., integrate into ERPs, beneficiaries to ensure that the flow of these payments is seamless from a client experience perspective. That it's, one doesn't really have to rack their brains to figure out whether account details are correct, not correct, amount is correct, etc., etc. So those things are happening. If you look at the way people have consumed these services over a period of time, that's changed quite significantly. Historically, it's been a brick and mortar, branch-led model that has sort of moved on to web, to a mobile app-based solution. So from a client experience perspective today, I think it's all at their fingertips, it's convenient. And payments within that we see as a sort of an embedded offering as a part of the mobile app. Anything to do with financial services, people are beginning to offer this also as a part of the larger solution or the umbrella offering to the customers. That offers more choices to the customers. If you look at the turnaround times, of course, the traditional wires would take about a couple of days to come. Today, payments move across borders in a matter of few hours. So that sort of changed thanks to the local clearing systems and the changes that we've seen all led by technology. If you look at the cost of remittances, I mean, thanks to the speed, thanks to the finality, visibility, cutting down risk, etc., and innovation led by technology, the average cost of sending money globally that used to be, upwards of 10% about a decade back, as per World Bank and IMF estimates, That's down to about 5.5%. So it's down by about 50%. And I think the way we are going, perhaps this could come down by 30 to 50% in the next 3 to 5 years, if we get our act right. In terms of the range of products and offerings is today, that a customer is the king. They have a wide variety in terms of choice of what to use and how to sort of use it. At our own organization, Niyo, I mean, today you have solutions ranging from a zero Forex debit, credit card, a multi-currency card, you have remittances, you have cash. That's also something that we do with the use of technology on the app. So, from that perspective, I think the customer is very wonderfully placed and technology has changed the way money moves across borders.
No, I agree. There is a lot of, the Forex, for example, the Forex that we launched with FX Retail is an example. And I'm hoping that, banks' experience of giving currency will further get uplifted through this integration that on BBPS we have launched. We are launching actually in GFF also in a big way. We just did a pilot. So I think, Forex, the apps experience, the Book My Forex and other entities, those experiences, those similar fintech experiences can be, brought into bank side, and those collaborations will really bring the customer experience to another level. Absolutely. That's the way to go. I think time says I can't do round 2, so we'll straight away go to the rapid fire closing prompts. Here, what we'll have is a question on the screen, or I'll speak about it anyways, and there all of you will have to complete the sentence in one word. So I'll look like we can go one after the other to complete the sentence. So the first one is future in one word. In one word, describe the future of India's financial ecosystem. Maybe just one word that will help us. Yeah.
Integrated.
Sure. Integrated.
Digital.
Digital. Resilient.
Innovative and promising. I'll give you 2 words.
Innovative and promising. Thanks a lot. Big round of applause for our panelists for sharing this. The next slide, if that can be brought up. I would like you to finish the sentence. By 2030, India's financial system will be, Santosh?
A transformative force, fueling the country's superpower ambition and also scripting change in a dynamic global world.
Wonderful. Thanks, Santosh. Neeraj sir?
Best in class.
Best in class, absolutely.
It will be most efficient and credible globally.
Most efficient and credible.
I think the size and scale would be multifold, especially in the fintech space, probably 3 to 4 times the current size.
I agree, yeah. The size will grow, people will have ease, and a lot of people will travel, go to universities, etc., and it'll grow 3 to 4 times. Great. What's one piece of advice you would give to the next generation of fintech leaders, Santosh?
Invest in talent. Because I think talent is going to drive transformation across all pillars, be it technology, policy, infrastructure, everything. So invest in talent.
Invest in talent. I mean, and that thing, while I'll let the people compete and I'll share my thoughts at the end. Neeraj sir, what do you think? What should be that thing?
Be very clear and focused on what end user problem you're solving for, right? Because unless and until you are very clear about what end user problem you're solving, you can actually end up becoming just a redundant piece of technology.
So result-oriented instead of activity-oriented, you focus on the end objective. Yes, Jena sir.
We should have a lot of liberty without license and compliance of regulations without regimentalism.
That coming from a clearing Selman senior is quite innovative. Yeah, Amit. What do you think?
My advice would be, I think, go global. I think we've done good job of India. About time we looked at larger opportunities that are there across the globe.
Yeah, thanks for that. So I think, on the talent part, thanks, all of you sharing that. But I feel that AI, with AI, and when you look at our children, they're not using their brains at times. They're just using AI. And then you wonder, how will they kind of practice things, because things are, they don't need to even do Google search. I mean, in our times, the Google search came, and now they have to do ChatGPT search, which is like much faster than and just very pointed results. So if they're not skimming through everything, how are they learning? So I think the talent piece is, from both sides, is very important. Like people polishing themselves and versus nurturing the right talent, I think both sides. So thanks all of you for sharing the insights. I hope we are on time, Sanjana. Thank you to all of you, and thanks to the audience for joining us. Clearly, the convergence of payments and FX in India has a good future, and we can see it's a broad set of ideas that came from our panel, how we are doing in terms of global benchmarks and where the opportunity lies. Thanks for joining. I think, yes, sure. Okay, we can have questions, it seems. So yeah, please go ahead and share if you want to ask any question from the panelists.
There is a mad rush towards AI. What do you think about a reverse of humanizing the AI? Would it happen as well?
Who would you like to
Anybody
answer?
can take a dig at it.
Go ahead.
I think anyway, AI is a tool only, and we need human beings with proper emotions. So that will continue. That's why empowerment of our human resources is the most important resources in any company, with empathy and a lot of encouragement. Then we can also use AI to the fullest.
Maybe I'll just add to that. It's artificial intelligence which is created by real intelligence.
Yeah.
So unless you have a good mix and balance of both, AI alone may not succeed, is the way I look at it.
So once you go to a certain extent of AI, how do you humanize it back?
So it would not be a binary, a 0 or a 1 is the way I look at it. It would be somewhere in between. So you have to have a balance between what you want to leave to artificial, what you want a human intervention for, to ensure that the outcome is optimized.
I'll just add to what you said, the two aspects to it. I know there are these tools which say humanize the AI output. And the children are using it in schools. I know this for a fact. They're saying, this is created by AI, but we put it in a tool that says humanize the content so that teacher can't predict that it's a AI generated output. And secondly, and I heard in some forum somebody mentioning that this content which is created is a lot of content that has got created by males, because males were the primary workforce throughout. Hence, the content is also very, very, thoughts of the male counterparts are represented in the AI. So we need a lot of females, hence, maybe to humanize the part of AI that you are saying.
Yeah, I just want to add that, it's still going to be data and patterns, right? So, how you have behaved in the past in a situation is what it is going to replicate and show you in the future. But, human beings are volatile creatures, and, their behavior is not very predictable each time. So I think humanization is a distance. After it gets humanized, to dehumanize is, really, I think, something of the future. But if we can get the humanization right to some extent, yeah, maybe it will help us in dealing with, consumer behavior a little better and many such other emotional angles, across the world.
Thank you. Thank you so much.
Thank you so much. Thank you for an outstanding insight. Well, the discussions was not only informative but also truly engaging. Thank you so much. We also extend our heartfelt thanks to our speakers. It has been an honor to have you join us for the Global Fintech Fest 2025. Thank you, everyone. Thank you so much.